Welcome. Here we are, another day, another two pretty intelligent-looking blokes that I'm sitting here talking to today, and it's a bit of a juicy topic. Um, we've had how many different announcements from the government over the last few weeks, and one of the biggest ones that has captured the attention of small business owners has been in and around this guaranteed loan scheme, or how guaranteed is it? Do we know? So I've invited Mark Hill-Rennie from ANZ and Doug White from Kiwi Bank to come on and have a little chat. We can talk around what the scheme is and really what are the alternatives that are out there outside of the scheme, because number one, do you qualify? And number two, if you don't, what are your other options that the banks or other lending institutes can potentially supply to get you through? So I'm going to let you guys introduce yourself. We'll go in order of seniority by years, and of course looks. You know, Mark Hill-Rennie, he's a bit of a player.
I give it to him every day.
So Mark, we'll let you introduce yourself, what your role is, and we'll go from there and move on to Doug, while I just quite visibly look to another screen while I'm getting this thing sorted out on Facebook Live.
Cool. So look, I'm Mark Hill-Rennie, obviously. I'm a regional manager for ANZ, so specifically in the business bank area. Have a team of about 48 business bankers across Auckland East, which sort of runs Newmarket out to Howick. So obviously cover a lot of business customers. So yeah, that's my role, just running that team effectively.
Mm-hmm.
And my name's Doug White from Kiwi Bank Business Banking. I'm a relationship business manager. I've worked with Kiwi Bank for about 7 odd years. My client base is basically businesses with 1 to 5 million sales turnover, and the area I sort of cover is out that West Auckland to North Shore.
Mm-hmm. And the reason I've invited these two guys on is they're both very, very prolific and active on LinkedIn. They're also, I'll say, friends of the Connector family. They're always out there giving great advice to the people in our network. And so I'm really, really glad to have you guys on, because I know that you both just give so much. Now, I do want to say this just so that you guys don't have to. Let's get the disclaimer out of the way up front right now. Doug and Mark have given their time freely. They are not here as financial advisors to tell you what to do with your business, with your money and the situation that you're in. Nobody's going to be able to give you that advice without sitting down and having a good, solid one-on-one. So feel free to stick your hand up, or feel free to use the Q&A to ask some questions. But please, this is, you know, we've got all sorts of legislation in place that you need to take responsibility right now. Take the answers with a grain of salt. They'll be given with the right best intentions, but they may be a little more generic and will always be added to, at the end, consult your financial professional or go to your bank and get that advice first. So that's out of the way. Gentlemen, so what is this whole thing that is coming out right now in regards to, let me just get the exact wording right, the Business Finance Guarantee Scheme from the government? Mark, do you want to give us your first crack at what it is and what's being proposed, and then we can start getting into whether or not the banks are actually responding to it yet, and the criteria that people need to fit to be eligible.
Okay, so look, it is a scheme which is 80% backed by the government and 20% by the banks. There is criteria set out if you go onto the government webpage and what have you, in terms of who can and can't apply. It's pretty broad, but it does cut out a certain number of things. If you're into manufacturing cigarettes or machine guns, you can't apply, for example. Turnover needs to be over 250K, and I think it tops out at about 80 mil or something like that. So what I would say about this scheme, though, is it will require assessment around business plans, a business case, and only your own bank is going to be looking at this. There's no point, for example, if you're a BNZ customer coming to ANZ. We'll only be looking at our own customers at this stage. What I would also say is, and we'll get onto it later around other options, is it's not going to apply to a lot of businesses. There's no two ways around it. And a lot of businesses won't actually be able to access the funds. Although there's something like 6.5 billion in there across the 7 banks, that might sound like a lot of money. In reality, it's chicken feed. I know how much we lend out every year, and that's not a lot of money. So you need to be thinking about, hey, full picture, what can the bank do for me? Don't just be relying on this scheme.
So, Doug, just in a general sense, what are some of the things that the banks will be looking at in regards to their clients for eligibility or criteria around that assessment? And I completely get the point Mark's making in and around, have you actually got a viable business to start with, and have you got a plan that we can assess? Because if the bank's putting 20% at risk, they're going to be reluctant to back businesses that they don't believe in.
And that's very true. And as I say, the credit criteria of the banks really actually hasn't changed from what I can see. So the same criteria that applied before COVID-19 still applies now, and a lot of it is down to profitability, serviceability, and viability. And a key one there is, the scheme is you're allowed to borrow up to about 500,000 per operating business within that you can go up for, and but if you've already got undrawn facilities, don't come to the bank asking to try and get the business finance scheme, which some people might think is trying to look at ways of trying to get cheaper money. You've got to use your own facilities first and reserves, not thinking that this is going to be a free ride. And a key point is the money does have to be paid back
within 3 years.
Within 3 years, and a lot of people think this is it's a subsidy or a grant. It's not, and we all know that Mark will agree is that it is about the customer outcomes, and at times there's no point shoveling more fuel on the fire if the customer didn't have a viable business at the beginning. So the way I'm seeing how things are panning out is that a lot of the banks will be asking for your financials or management accounts up until about December to ensure what did the business look like before COVID-19. And if you had a sound business, it's viable, and you're doing well, then hey, look, there's most probably a good chance that the banks will be able to help you out going forward. But it goes back down to the basics of having a good plan, providing us with cash flow financials, and just sitting down and having good discussions with us.
Yep.
I don't know, is anything, Mark, there you'd like to add?
No, you're spot on there. What we will be looking at, obviously for most, conditions will have changed, not all, substantially since lockdown. So there has to be a plan around what's going to happen going forward. What will revised cash flows look like for that business? And is it going to be a sustainable model going forward? So those are probably key things they're going to be looking at.
Okay, so let's drill down into that a little bit, because I think that's quite important. There are a lot of people looking at, and I've been talking to a heap of businesses and business owners that are saying, oh, look, this looks like something that we could utilize to actually fast track a number of initiatives that they were looking at doing. So they think that they've got a solid business plan. And this is going to allow them to actually, when they get through this initial period, look at then reinvesting that money into their business so that they can fast track some growth strategies, because no doubt there is going to be opportunities for businesses out there, because some of their competitors aren't going to survive. But if somebody is going to be putting in an application for this, what are the sorts of things that they are going to need to have on hand and ready to get this thing through?
I'll leave that with you, Mark.
Well, pretty simple, really. You are going to need reasonably up-to-date financials.
Yep.
You would also, so not just your last financial years, but your trading figures and what's been happening up to pretty much lockdown. You will need a comprehensive plan around, okay, so what's going to happen going forward? So how are we going to be able to pay this? So how is business going to come out of this viable and then being able to pay this? And you are going to need to produce some cash flows based off this new plan to show, hey, going forward, I'm going to be able to afford this loan.
Yeah.
I was going to say, add to Mark with in regards to cash flows, don't please give us just an Excel spreadsheet with a lot of numbers on it, because you're going to go to the bottom of the queue. We're already, sorry to be blunt on that, but at the moment, I'm sure with Mark's team and the team that I work, we're sort of really under the pump at the moment, and even when we do have a bit of spare time, we're then helping other areas of the bank to try and work through their caseload as well. So,
so what does a good cash flow forecast look like to you when it comes to supporting documentation? What sort of, how do they break that down?
Well, bringing down, if you've got, if the sales are there, giving us, how did you come up with that? It's, and a lot of the time the business owners do know how they've come up with it, but it's just in their head. So it's more of just saying, well, hey, look, just put it down on a piece of paper, and it comes, as Mark was saying, as part of your business, as your plan. More likely they know the figures, but just take that little bit extra is to put it on paper. So when we look at it, we read it and we go, hey, we know exactly what, where that figure came from. How was it, looked at? And that goes with the expenses as well.
Yep. So a little bit around business continuity planning. How are we actually getting through the existing situation? The business plan in regards to the business and marketing plan around, well, these are the opportunities that we see that we are going to chase. This is the plan that we've got in place in regards to making sure that we're being as cost efficient as possible, and these are the cash flow projections from it, and the breakdown around where those different revenues are coming from with a little bit of rigor behind it, and if possible, supporting documents to show that this isn't just like what most of us do. And I reckon that there's going to be a heap of opportunity in this area, and if I get a guy on the road, we're going to do all right there. So the old finger in the air just doesn't cut it.
No, it doesn't.
Are you looking for a new job? That explained it pretty well.
Exactly.
Yeah.
And I'd also say is when you're putting this all together, please involve your accountant and other business partners or mentors or business coaches or people that you have as your close circle of advisors. Get them all in to have a look at it, because at times they may add a lot of value or might have just overseen things. And I know from me is if it has come from your accountant or there's been a note from your chartered accountant to see that they have looked over it and it is viable and does make sense, it does add a lot more weight to me, because it means that going down to that character is it knows what you're talking about.
Absolutely. I mean, and the advice that we're giving to our existing clients and those that are thinking about coming and joining the Connector team is, we are more than happy to sit down and work through a business planning process with them so that they've got something of substance to present to the bank, both from the business continuity, the overarching strategy for the business, and around a marketing plan so that you can see where that money is going and where it's coming back in.
Yeah, that's good.
So all that aside, I see, BNZ are saying they're active now and they're processing applications. ASB's just come out saying that they'll be processing applications and looking at and things from the 14th of April. Have the ANZ or Kiwi Bank, have you got any news in and around the interest rates on that? I noticed the wording from BNZ was quite interesting. The wording from BNZ was from as little as 4%.
Yeah. From our part is no, that is still in discussions with our pricing committee and the powers of be. So that's still to be decided, with a little other few things that we need to sort of be looking at to make sure that the process is streamlined and that we can, handle the influx.
Yeah, it's interesting. They're saying there could be some variable pricing depending on how they assess the risk. I'm guessing with that, potentially. So from ANZ's side, no, they haven't come out with a rate as yet. So we're still waiting on that. So it'll be
you can respectfully decline to answer this question, but I feel obliged to ask it.
Yeah.
If the government put pressure on the banks to have a particular rate, and are the banks pushing back saying it's not viable because we're taking 20% of the risk?
The government's not pushing on any rate at the moment, no, but they do have some say, although at the end of the day, they're leaving it over to the banks to make a commercial decision on it. Part of the thing you've got to remember, even though the government is guaranteeing at 80%, they're expecting the bank to look after their 80%.
Yeah.
They're not just, you know what I mean? And the banks take that as a serious responsibility.
Well, you do have to do your due diligence, because everyone that falls over, it's a lose-lose.
Well,
Exactly.
correct.
Yeah.
And I guess from a taxpayer's point of view, is if we can mitigate that, 6.2 billion, so there's only, I don't know, say $500 million risk that's left over. Well, that's good for everybody. It means it's worked well.
Yeah.
Yep. Fantastic. So what are the alternatives? Mark, I'll let you take the lead on this. If I'm coming to my bank and I think that this is the option for me, Doug touched on it before and saying, hey, look, if you've got reserves, you should be tapping into those first, and this should be the next step, so to speak.
Yep.
What are the alternative measures that the banks are already offering?
So look, there's a lot of options, and you do want to go to your bank early and have a discussion with them around various options. It'll very much depend on size of business, whether you have a mortgage, all those sort of things in terms of how they might be able to assist you. But the first thing to do, even if you feel like, hey, I'm all right at the moment, nothing to worry about, is start talking to your bank, because an awful lot of people have already, and that means turnaround times in terms of answers and what have you are quite slow at the moment. So flood of inquiries. But there's numerous things that banks are assisting with, and most of them are doing similar things. So working capital facilities are being offered pretty well, certainly from ANZ's point of view, but certainly from most of the banks, as far as I'm aware, for businesses. So that's certainly available. Converting loans or home loan to interest only, so bringing down the repayments, is available. A big part of a lot of SME owners is actually their mortgage payments. In fact, a lot of them have done the vast majority of their borrowing via mortgage. And we don't call it the mortgage holiday, because it's certainly not a holiday. Most people call it a mortgage holiday. It's certainly not a holiday. All it's doing is kicking the can down the road for 6 months. So it means you're making no payments at all for 6 months. But, and this is a big but, and it's probably fortunate we're in a very low interest rate environment at the moment. It's still gathering interest over that period of time. So of course, when you come back to reactivate it, you've got a cost that's built up over time there. Like I say, it's not as bad as it could have been in high interest rate times, but it's still and something you want to talk to your banker about if you're thinking around that option. But to be honest, for many businesses, that is a good option, because quite simply, they've got no income, and how they're going to pay the mortgage when it next comes up is a really pressing issue.
And agree, and it's the same sort of applies to the business is that if the people want to minimise the cash going out they've got, they've also got the ability to approach their bank and put their business facilities onto a 3 to 6 month, interest only facilities that Mark's already pointed out, or the same principle applying for, taking a deferring your repayments on your loan. With Mark, I do not like that word mortgage holiday because when it first came out, I had clients ringing me thinking that the government had thought I was putting money in and stuff like that. And I had people calling me that had lots and lots of money in reserves and just thinking it was there's something in it for me. And it was like, no, we're having a different conversation.
Yes.
Yeah.
No, we've had very, very similar conversations with a lot of our clients around that whole thing. We're lucky enough to have Campbell Hasty on last week as well, talking around things from the mortgage broking side of it. Yeah. And please just get that whole word holiday out of your head, because that interest accrues, and when it comes back on, you will be paying higher monthly repayments, or you'll have to extend it back out to another, back out to that 25, 30 years and extend the term.
Yeah. And I guess also on the other one is, when speaking to clients, is people have automatically gone straight to there, but people have got to remember that the mortgage holiday deferred payment, it's the last arrow in our weaponry that we've got. So it shouldn't be the first thing being used. That alternative should be looked at first, so that if things do get harder, there's still some room left.
Yep. The other side, on the other side of that I think would be good to touch on, we did touch on it last Tuesday, is in and around going down to interest only and doing an assessment, and this is the important thing around talking to your bank, doing that assessment. If you're on a higher rate at the moment, what would the break fee be? And, what would it look like coming back on at interest only at 3%, 3.5%, whatever we're down to right now? Because there are still plenty of people sitting up there in the 5s and 6s, more in the 5s.
Yeah, it is. And I always use the motto is the higher the rate, the less the cost, the lower the rate, higher the cost. And I actually had that exercise yesterday where if a customer was to break their rate, which is only at 4.25, to go down to something just under the 4s, they were still going to be 7 to 8 grand worse off.
Mm-hmm.
So when doing the calculations, it was like, you're better off to stay where you are.
Yep. Good stuff. So in just to wrap it up, really, it's just, what is your one piece of advice to business owners today around what are they going to do on the finance side of their business, whether they're in trouble or whether they're not?
Well, I was going to say, for the ones that aren't in trouble, hey, look, there's going to be opportunities out there. Prepare for it and get ready. Ones that are in trouble or may not be in trouble, as Mark was way back before said, get in touch with us early. Also, something we need to point out is the guarantee scheme. It's not here for a very long time, and at the present, as far as I'm aware, and from reading other banks' websites and our own, it's only around till the end of September. So, if you're going to get in, very shortly.
Yeah. Have either of your banks actually issued any loans under that scheme yet, or is it still that we're still working through the finer details, we can't do it yet?
We certainly aren't. We're taking applications in, which are pouring in at the moment, but full criteria and what have you. I'm expecting probably tomorrow, but even then, people are not going to start getting answers till next week, best case in terms of the earliest ones. I think a lot of the publicity initially said, well, you could be 10 days before you get an answer. So going off the other schemes that have been put in place, don't hesitate if you're thinking of doing it or starting to get your initial application through to your bank.
Yeah.
Mm-hmm.
Yeah.
Got a good question here from Ruben, who's asking a more of a technical question. from a business broker's perspective, can you ask the team or the guys what their comments are on business lending after the lockdown, with specific thought around people buying a business, especially in terms of setting out what is needed, metrics-wise, for the banks to give an indication of lending, i.e. what EBITDA they would be lend like, something like that. Appreciate that there are more metrics that they need, and hopefully you can open up further though.
So this is somebody who's looking to buy a business after So pretty much the financials, the previous financials are going to be useful, but obviously they're going to be potentially quite different to buying a new business. So it'll be very much like we talked with the original lending,
Guarantees.
is you will definitely need a plan. Definitely need to understand that cash flow and how you're going to pay back that loan, etc. And I think the big thing we'll be looking at is the operators themselves.
Yep.
It's going to come back again to what are their experience? What do they bring to the table coming into this business?
Yeah.
Because we've gone from a period of readily accessible funding to a period where it is not going to be easy to get funding, and banks generally are going to be backing certain classes of operators, and they're generally going to be people who bring some good experience to the table in this place.
So from my perspective, looking at that, I've been involved in a few acquisitions over the years. I think as looking from an investment perspective, the banks will be much more likely to fund roll-ups where you've got existing businesses looking to acquire businesses in distress and absorb some of the overhead, get rid of the inefficiencies so that they can really just expand their footprint by offering the same services, and look much more harshly at somebody that was potentially in a job and has now found themselves redundant and looking at buying a business to set them up for the future. Because if those are floundering businesses, and you've got somebody that has come from, whether it's a corporate background or something like that, that doesn't necessarily have the experience of running the business and not a huge amount of capital behind them, I see it being a lot more risk averse.
Correct.
Yeah.
Gee, can I come and work for you guys?
Well, I was going to put an offer through to you, but you have a day job at the moment.
Yeah, but I mean, just for everybody out there, and I'm not trying to blow smoke up these guys' asses, but I've had a number of offline conversations, both with Doug and Mark and other people in the industry, and this isn't a case of the banks making hay while other industries are suffering. I know Doug is doing ridiculous hours. Mark was just talking about his team potentially working all the way through Easter so that they can actually deal with all the level of inquiry that's coming through. Everyone is working their asses off to try and get the best outcome for business owners out there. It is a shit fight. Let's be blunt about it. It's a lot more brutal than people expected. Even myself, I set Connector up with the view of a recession in mind, and there's been days where I've just gone, oh my God, what the hell's going on here? So I think, big kudos to you guys for even just making the time today, because I know how under the pump everybody in the banking sector is dealing with the fallout from this.
Yeah.
And thanks heaps, guys. Really appreciate it.
And I really enjoyed it. Thank you. And Glenn, also thank you for putting these webinars out on a daily basis. They're really helpful.
Yeah.
Absolutely. Always a pleasure. And look forward to catching up with you guys again all soon.
Okay.
Thanks, folks.
See ya. Bye-bye.